Hello everyone, welcome to Elliott Wave YouTube channel. Today is January 18 and the chart of the day that we're gonna take a look at today is the Russell 45 minutes time frame. We can see right here we ended this with W here, right, in the minor degree, and then the correction in 3 swings ended X. Right, so WXY is a structure that we call a double 3, or sometimes people call it double zigzag, even though the internal of the W and the Y is not necessarily a zigzag structure, but any corrective structure is possible to be the subdivision of the WXY. But a lot of times people just call it double zigzag. Now that means the internal of the W here, you can see, even though again this is not showing the whole data, because then it will look very ugly if we show like all, like very compressed chart like this, right? So you can see in the C here that is telling you that okay, well, that should be ABC as the internal of the W, and then as to the internal of the Y here, the internal is in the form of another WXY in the lower degree. Now this is a W because the pullback here was in 3 swing. It was not in 5 waves. If this one was a 5 waves impulse, then this would have been an A, but this one was also 3 swings, right? Like everything is a 3 swings down, 3 swings up, 3 swings down. So the whole thing is considered to be a big 3 swings, or if you want to count the subdivision, this is a 7 swing. 1 2 3 4 5 6 7. So we ended W of Y over here, and now looking for a thresh rally to finish with X of Y. Right now, potentially, if we assume we can really go up from here, then technically speaking we can reach the 100% to 161.8% of the AP here, which is going to be this area 1934, 1949. Then from there we can possibly turn lower again. You can see the right side is actually in red, which means in the shorter cycle we do have what we call a bearish sequence. If there is no bearish sequence, the chart is going to show like a turning down arrow in a black color, right? Now let's zoom out and try to understand where this idea of a bearish sequence comes from, and what will be a potential target on the downside. Now, like I said, the rally can potentially end here, 1934, 1949. Now this is something that a lot of people that do not understand Elliott Wave always get confused about. Because their lack of understanding is the potential pitfall. Now here we're showing a thresh rally, but and then I'm giving you the potential area where it might fail and turns lower. But in reality, technically speaking, right, this is really in the key level 2004, and the rally, it can become it can evolve into many different forms. Like this one is a simple ABC, but for example it can evolve into a WXY where you got ABC as your first leg, and then pull back in the X here, and then you got another leg higher in the Y, another 3 swings up like this, right? So you can do something like that, and as long as it stays below 2004, we still continue to favor on the downside, again because of the bearish sequence we're gonna look at when we zoom out into a larger time frame. Now the other idea here is that even this rally can become a 5 waves. So this could be 1 2 and then become 3 4 5, right? It can become a 5 waves rally like this, and that 5 waves rally ending only an A, right? Only ending an A, and then you get a B, and then you get a C. But eventually, as long as we stay below 2004, we still can see further downside again, right? So we always say, and we always try to explain to everyone, that Elliott Wave is not one path. It's not just one path, guys, but it is a combination of the knowledge of the probability and also understanding what is a good situation where we can trade is the one that can make us successful. But lack of understanding and just trading every single thing that we saw in the chart, in the swing, that's really the downfall. If we are treating this chart here as like a trading signal for every single swing, right? Which is not, it shouldn't be the case. Now here, if let me refresh again. So that's the idea. So we always say that for example, if our destination is lower because we eventually look for more downside, it's like mathematics. In order to go to number 10, which is our destination, there is many different ways to go there. You can go 1 plus 9, 2 plus 8, 3 plus 7, and so on and so forth. So it's the same thing here. In order to go down again, eventually break below this previous low, we can go this path, which is your 1 plus 9. It can go to double 3 or double zigzag, which is 2 plus 8. It can be doing 1, 2, 3, 4, 5, ending A here, which is your 3 plus 7, and so on and so forth. Could be doing a triangle, which is your 4 plus 6. So the shorter cycle is the one that always is the most difficult for people to understand, and because they lack the sort of the bigger picture, right? They lack the bigger picture and understanding what is the bigger picture, and also they lack the risk management aspect. Usually the position size is too much, too over levered compared to their capital. So here let's zoom out and try to see what we got here in the larger time frame. So I'm putting here the WX here in the 4-hour time frame, right? I'm copying the WX in the 4-hour. Now we can take a look at this. So what we have here is this is the last significant peak, which is on December last year. Since then, we clearly can identify 1 and 2, right? Like it's like, just forget about the label for the time being. Just ignore whatever label we have. But you can identify this is clearly your first swing. So let's call it in a swing. This is your first swing, this is your second swing, and then it breaks down again, breaking below the first swing. Now we label it WX, but just for simplicity, let's remove it. So we don't talk about Elliott Wave now, just swing. This is your first swing, this is your second swing, then you break below the first swing. So typically, again, as a general principle, when you have this kind of structure, when you have a low sequence, that is considered to be bearish as long as your third swing has not reached the 100% of the first swing. So the 100% is going to be 1848, which is basically saying that this is your first swing and this is your third swing, and the third swing reached 100% at 1848. Okay, now whether this is a 1, 2, 3 or whether this is an ABC, right? 1, 2, 3 is an impulse, ABC is a correction. They both ideally, and most of the time, let's say 80% of the time, will need to go past beyond 100%. So if it is ABC, then usually it will reach 100%. 1, 2, 3 usually can go to 1.618. Now again, nothing is 100%. This is why I'm talking about probability here, but it is around 80% when you have a lower low or higher high. And the higher in the time frame, the better the chance. So if you see a lower low or higher high in the 15 minutes or 1 minute, then of course the probability is going to be a lot lower compared to a higher high, lower low in the daily or weekly, for example. Okay, now here is the 4-hour, which is pretty decent as a time frame. It's not too it's not too short term, it's not too long term, right? It's just kind of like a medium term. So we got this lower low here, and we're looking 1848. So as long as we stay below 2004, we expect the rally to continue to fail in the sequence of 3 swing or 7 swing, because correction is always in 3 swing, 7 swing, for the downside. Now sometimes truncation happen, and this is also what a lot of people get confused about. Truncation is when it doesn't reach 100%, when you have a bullish or bearish sequence, but it doesn't reach 100%. Now, at what point do we suspect of a truncation? That's the point where this bearish trend line breaks. If you break and close above it, then you can start to suspect, okay, we might not get another leg down anymore, and the cycle might be finished over here. It's not ideal, but if it breaks higher and close above, then you have to follow the market and not force the market to follow you. Okay, so that's the idea here, guys, for now and in the Russell. And as always, if you want to get more updates, we're gonna update the shorter cycle every single time, like 4 times a day in our member area. If you want to get more updates on Russell or any other indices, Forex, commodities, feel free to check our service. We have 14 days trial, and I'll see you all again next time. Have a nice day, everyone.